The highly anticipated Q2 earnings release from UnitedHealth just dropped. Adjusted EPS came in at $4.08 per share, missing analyst expectations of around $4.48 and dropping significantly from $6.80 in Q2 of 2024. That's a pretty steep year-over-year decline. On the revenue side, things looked more promising. Total revenue reached $111.6 billion, up roughly 12 to 13% year-over-year, driven by continued growth in both the UnitedHealthcare and Optum segments. It's good to see top-line growth, but the problem is that rising costs are eating into their margins. And net earnings fell to $3.5 billion this quarter, down from $4.4 billion a year ago, and that decline speaks to the shrinking margins the company is currently dealing with. One of the biggest red flags in the report was the medical care ratio, which came in at 89.4%, up 4.3 percentage points from last year. That's a major concern because it indicates UnitedHealth is spending significantly more to deliver care while their pricing hasn't kept pace. The company explained that this increase is primarily due to rising medical cost trends outpacing pricing, including higher unit costs, more intensive services, and ongoing reductions in Medicare funding. That said, on the earnings call, executives made it clear they're addressing the issue head-on. They outlined a strategy focused on improving pricing, cutting low-margin plans, and redesigning benefits and products to restore margins. Their target is to get back within their expected margin ranges by the second half of 2026, with more meaningful improvement by 2027. Rather than diving too deep into every financial line item, the bigger question for investors is, where does UnitedHealth go from here? Since the earnings release, the stock is down 7.46% as investors reacted to the miss and rising costs. Was the sell-off justified? I mean, maybe, especially if you're looking for quicker returns. But if you have a longer time horizon of 1.5 to 2 years, there's a solid case to be made for a rebound. UnitedHealth has a strong track record, scale, and leadership team, and they seem committed to making the necessary changes to get back on track. That sentiment was echoed multiple times during the earnings call. Executives highlighted a number of strategic shifts, including changes to leadership, internal culture, business approaches, and even board governance and succession planning. They wanted investors to know that they're not just hoping things improve, they're actively making moves to ensure they do. So if you've made it this far into the video and you're wondering what to do next, ask yourself 2 questions. The first, are you chasing short-term returns somewhere else? Or 2, are you comfortable holding for the next 1.5 to 2 years for a possible 50 to 100% upside? Your answer should shape your strategy. Personally, I think the market is overreacting. UnitedHealth is a giant in the healthcare space with all the resources, infrastructure, and expertise needed to navigate this rough patch and come out stronger in the end. If you enjoyed this quick earnings breakdown, don't forget to give the video a thumbs up and subscribe to the channel. Let me know in the comments what your game plan is with the UNH, and thanks for watching. I'll see you in the next one.